Hey guys, what's going on? Welcome to the first ever episode of Simply Explained. Thank you so much for taking an interest in watching this video. This is the first time I'm ever making my own video. If you follow my wife, you know she makes YouTube videos all the time, and I've been in a few of them, but this is my first time kind of doing my own thing. So I hope you guys like this video. I think it turned out alright. I just got done filming it. I'm doing my best not to make this video too boring. I am talking about accounting, and usually those videos aren't the most exciting, but I'm taking it upon myself to try to make these videos a little more understandable and not so dry and boring, so that way people that might not know anything about accounting can maybe learn a thing or two. So I hope you like it. Let me know what you guys think, and I appreciate any advice. These videos will get better over time. This is my first one, so you'll notice there's a few like glitches in the screen and things like that. Still figuring out all the equipment and the logistics. So please show me a little grace, and thanks for tuning in. Let's get into the video. Alright guys, so I want to start just by giving a simple definition of what accounting is, and then we'll move on from there. So I just did a little Google search, and I did Merriam-Webster accounting definition. So Merriam-Webster defines accounting as the system of recording and summarizing business and financial transactions. So I mean, I take that as, anytime there's a transaction in business, there's some sort of system to record all of those things, and then at the end of the day you can kind of have a summary of all of those things that happened in the business, which we're talking monetary things. So whether let's say you got paid or you paid someone else, things like that. So all right, so let's get into some examples here. Just want to start out by kind of explaining what kind of tools companies use to record those transactions. So and summarize them, right? So to summarize them, companies use something called financial statements. And there are two basic types that companies use. So there's more than two financial statements, but I'm just going to talk about, let's see, financial statements. Let's just write this down. Financial statements. All right, number one, there is an income statement. And that is also known as a profit loss. Maybe you've heard the term P&L thrown around before. That's exactly what that is. That means profit and loss. So I'll go back to that in a second and explain what it is. But the second financial statement is a balance sheet. And I'll also dive into that one and what it means. So let's see, where do I want to start? Let's just start. The income statement is really simple, so let's just start there. And so the income statement is basically a simple formula. It's revenues. So revenue minus expenses equals profit or income. And for those of you that don't know what revenue means, that's just sales. It's basically money that people paid you. So let's just lay this out here. I'll give you an example of what one looks like. So let's put revenue, and then let's list expenses under that. And I'm going to do colon because I'm going to leave some spaces for all of those expenses. And then I'm going to list out profit. All right. And what do you say? Let's say that, okay guys, so something to know about the income statement or the P&L is that what that looks at is a period of time. Okay, so you're looking at maybe, a month or a year or a quarter or whatever specific period of time to see what these categories totals were. So let's just look at, let's see, what is it? It's August right now. So, I just did all of my clients' July financial statements. So let's call this July 2019. All right, and so all of these numbers in this column are going to be for July 2019. We're running a company that sells t-shirts, okay? And we sold a lot of t-shirts in July, and we had, let's say, $200,000 worth of sales. I mean, I'd be happy with that. If I had a t-shirt company, I would take that. All right. And then, so to sell those t-shirts, you had costs, right? So let's see, some common costs for t-shirts would be t-shirt materials, right? So the actual t-shirt, you had to either make it or buy it from someone else. And let's just say that costs, I don't know, let's do $50,000. And then maybe you have an employer or two or multiple, so you got to pay somebody to make those put those t-shirts together for you and package them and you know, ship them out and all that stuff. So let's just call that labor, and we're gonna make that let's call that $20,000. And you also have probably a building, right, that you make all these t-shirts in. So let's put rent, and that would be, oh, let's just call that another $20,000 a month. This is an expensive building that we have, all right? And let's think of one more common expense, just to keep it simple. Let's just do insurance. That would be $5,000 a month, okay? So now what we're gonna do is we're gonna total these expenses. So I'm gonna do a sum here. This is $95,000. So now, how do we figure out profit, right? We just do another simple formula here, just like we see above. We're going to do the $200,000 minus the total expenses, and we have a profit of $105,000. I would take that. That'd be great. Have that in 1 month, you know. And a lot of times too, companies will look at percentages. So they would look at the percentage of revenue, and you know, base their success on what that percentage looks like, and they would have a goal, like say their goal was, you know, 10% or whatever. If they were below that, they'd be disappointed. So you could look at dollars, you could look at percentages, and all those types of things. And you know, I'll tell you right now, not many companies make 53%. That's pretty rare. So I was pretty generous on their expenses. There would be a bunch more things that go into it, obviously. So that's kind of why that's high. So I hope that makes sense. Like I said, the P&L is pretty simple. So now I want to jump over to, let's do a sample balance sheet. By the way, guys, let me know if the pace of this is, you know, like too quick, or maybe you want me to go slower. I'm talking too fast, but I also, you know, don't want to go too slow. So this is my first time, so let me know what you guys think of the pace of this video. All right, so let's go to another tab here, and let's talk about the balance sheet. All right, this is exciting stuff, guys. All right, so bear with me 1 sec. I'm gonna do a little artwork here so I can explain this to you. All right, what I'm gonna do is I'm drawing 2 columns. Okay, and so hopefully you can see my 2 columns. I got one on the left here, one on the right. All right, and I'm gonna label the left-hand column as assets. Oops, I didn't mean to do all caps there. Oh, my goodness. All right, assets, and I'm gonna center that. All right, and then the right-hand column, I'm gonna label liabilities. All right, and there's something I want you guys to remember about the balance sheet. Okay, maybe I should have started with this, but the balance sheet is also an equation, just like the income statement is. Okay, and that is assets equal liabilities plus equity. Okay, and I will get into what those mean, so don't worry about it for now. I'm just going to keep that equation down there so you can see it. Okay, and okay, so let's talk about what assets are. Assets are things that you own. Okay, so that would be cash is a really common one, right? Hopefully you have some cash, and maybe you own some property. Let's see, property, or here, let's format this the same way. All right, cash. Maybe you own some property. Maybe let's go back to this t-shirt company. Okay, so they own some equipment to produce their t-shirts. What else? Let's say they also have inventory. They have t-shirt inventory. Okay, those are all things that they own. And let's go through and put some values to this. Let's put they have cash. They have $25,000. Okay, so property. Let's say they bought a property and they paid, let's go $250,000 for it, whatever. $250,000. Equipment, they have, let's call it $35,000. And then t-shirt inventory, they have, let's do, they're pretty, let's just say they're pretty lean. They got $25,000 worth of inventory, okay? So then we're gonna go down here and we're gonna total it. Let's just figure out our total assets. Again, these are things that we own. So how much money, come on. We have $335,000 in assets. That'd be awesome, right? I would take that. All right, and then let's move on for a second to liabilities. Liabilities are things that you owe, okay? So on this property that we have, we owe, so let's call that mortgage. So we've had it for a couple years, we got it paid down, but we still owe $200,000 on that property, okay? Equipment, let's call it equipment loan. We owe, that's pretty new equipment, we owe $30,000. Okay, so those are things that we owe. And then let's see, I'm gonna go down here and I'm gonna total this. So I'll let you guys in on a little secret here. The balance sheet, the reason it's called the balance sheet is because we need the left column and the right column to balance. So you'll notice that these two aren't balanced right now, right? That's because there's something missing on the right hand side, and that is, if you look down at the equation, it's called equity. Okay, so I'm just gonna put in a little section here for equity. And guys, just to make this not confusing for you, I'm just gonna call it equity, and let's put a value to that. So how we know our equity, right? If we look at that equation, we gotta do we gotta balance this out. So let's do 335 minus 230. And you might be wondering how that number just comes out of thin air, but I'll explain that in a second. So guys, the whole point of a company essentially is to make money, right? And when you make money, you're increasing this equity portion right here. And I'll show you guys. Let's see. When I go back, let's go back to the P&L. All right, so we're back at the P&L, and I want to explain how these two statements kind of work together, okay? So July 2019, we made $105,000, and let's assume that everyone paid us in cash, for simplicity's sake. Everyone paid us in cash, and all of our expenses were also paid in cash, during July 2019, okay? So we have $105,000 basically in cash that we made in July 2019, okay? So let's go back to the balance sheet, and then let's just say we're looking at the balance sheet at the end of July. So July 31st it would be, okay? So again, on our P&L, we made $105,000 worth of cash. So I'm gonna go over here and I'm gonna increase cash by $105,000. Okay, so now you'll notice that we don't balance anymore. Well, what we do is we have to go somewhere with that income, right? So we're gonna label this net income, and we're gonna put 105. Funny that those numbers ended up being the same. Hopefully that's not too confusing for you guys. I didn't mean to do that. But so before July, we had $105,000 worth of equity, and then we had an amazing July, and we increased it. We basically doubled our equity in July, which wouldn't, usually happen. But if that did happen, that'd be a great month. And just to make it a little more personal for you guys too, basically all the equity is it's net worth. So you'll hear people talking about celebrity net worths. You'll hear Jeff Bezos. They're talking about billions and billions of dollars worth of his net worth. All that is they're looking at everything that he owns and everything that he owes, and they're taking the difference and they're giving you that number. So hopefully that makes it a little more relatable. Understanding accounting can really help your personal finances, and it's really key actually. I track all of these. I track all of my assets and my liabilities and my net worth every single month personally. So, and I can really, I really understand if I've gotten better over the last few months or if I've gotten worse. So, let's just do a really simple example on the balance sheet here of what a mortgage could look like, because a lot of people have mortgages, right? So let's just zero. Let's say you bought a home. I'm just going to call it a house, and that is $250,000. You bought it for $250,000, okay? And your mortgage, you owe, we owe $200,000 still, okay? And that would mean that we have equity of $50,000, right? Again, we need those to balance. So let's say we sold that house. That means that we're gonna replace this with cash, because someone, let's say they paid us cash. All right, so cash is there, and we're gonna delete that. Okay, so then also we got to take this $250,000 and we got to pay off the rest of our loan, right? And that leaves what left over after we pay that off. So this is going to be gone, but our cash goes down to $50,000 because we had to pay off that loan. So I hope that makes sense. To see how it balanced now. So you still have that equity now because you have $50,000 cash, only now it's cash. I hope that makes sense, guys. I know it's probably a little confusing. Again, I'm trying to do a simply explained video, but it's tough, you know, to make it understandable. Maybe it's the first time you're hearing it. So rewatch it a few times. I bet you, you know, if you watch it a couple times, it might start to make sense. Otherwise, let me know if you're like, Brett, what the heck are you talking about? And if I get all those comments, you know, maybe I need to slow down in my video or just explain it a little more thoroughly. So it's kind of hard since it's my first time to know really how much detail to provide. So I'm hoping it makes sense, guys. Thank you so much for tuning into the first episode. If you liked it or if you didn't like it, please subscribe. I want to get 1,000 subscribers in the next couple months, hopefully, by the time I have a few videos out. I know it's kind of a lofty goal, but I'm really hoping I can do it. And share with your friends, give it a like. Maybe you hated the video, so go ahead and you can put that in the comment below too if you want. I don't know. I think comments are good for the algorithm, so whatever. Anyways, guys, thank you so much for tuning in, and I'll see you next episode. Love you guys.